Good morning, good evening, good afternoon, depending on where you are in this world. This is Agent Lee with an update for the Chainlink analysis. In the prior video, I introduced the stick method on how to use the angle of the stick to decide on when to take some profits. We know that the first angle was very sub 45 degrees angle. So if we go from bottom to major bottom, the angle then went to 45 degrees. It's not crazy enough to sell anything. So still worth holding through the ups and downs and the squiggles and wiggles in the price actions. Then the next stick to the next bottom exceeded the 45 degree. It became at around 60 degrees angle. That's getting pretty frothy, but not frothy enough probably to worrying about taking some profits. Then the next angle was almost 80 degrees. That's a 77 degrees. That means that when price action is getting to that degree from bottom to bottom connection, the slope or the angle of the connecting line exceeds the 45 degrees. That means you want to seriously consider taking some profits, or at least take a little bit off the table, or better yet, take the cost basis off the table. By taking the cost basis off the table, you're playing with the house money. Now let's connect the next. My goodness, this is about as near vertical you can get in price action. On this swing, in this squiggle wiggle up here, I would have taken a good amount off the table, because the decline from there to what we saw was a 60% decline. By using this simple stick method, whenever it gets really well past and nearer, closer to the 90-degree angle, you take profits. And if you had in this one taken your cost basis and then let the profit ride into this, and then taking the remainder of the trade-off, maybe leave 10 or 20% to see what happens, that would have enabled you to sit on plenty of profits. Now if you go back to the prior video, that was all well before all of this really started going to the 60%. So what to do now? Let's say you're sitting on huge profits. You took your profits based on this or another method. Well, let's see if we can combine pattern with Elliott waves. In this case, this pattern shows a potential bull flag that's forming. Okay, right like so. Bull flag is a downward pointing channel of price action that looks to be breaking out, which is bullish. But let's also add Fibonacci to this, okay? If we add it to the Fibonacci, we can see that price hit near precisely the 0.618 level of 194.71, okay? And that is a typical target for the retracement of a correction. However, is this the completion of the correction? Is this ending? Are we going to see higher highs? Well, let's look at the preponderance of evidence of what happened in the past. Look right here. Boom. Well, in this bull flag, it just kept going up. Okay. Let's look at another one. Look at this. Price broke out of this bull flag, consolidated, and just continued going upwards. So what I would say is that the primary count could show that the ABC correction, the requisite correction, could be complete. And if that's the case, then we would likely see the higher highs. However, let's say that this isn't complete and the breakout is really giving just a B wave bounce of the B wave bounce would look like, we can say that this whole decline was an A wave, and we're expecting a B wave, a retracement of, let's say, 50 to 0.618 of the decline itself, and then head towards a 0.78. That would make sense with respect to the potential of having this consolidate more. I think primary-wise, we are more likely seeing a B wave bounce and a C wave decline to come. The reason why these were complete is because they were in the midst of an Elliott wave impulse sequence that looks like this. So you can say we have wave 1, 2, 3, 4, 5, but I think it could be a 3, 4, and a 5, like so. So if this is the case, then wave 5 is still owed. How will we know whether this is a B wave bounce or not? If we see price going like this and just going upwards in a slow manner without any vertical green candles significantly running around or putting into it, then that's likely a B wave bounce. However, if we see price action just going vertical like this, look at these. The center of the angle going vertical and the green candles are being placed like that, then I think that would indicate that this series of near vertical moves would likely mean that we've got a new impulse going and higher highs to be had. So let's look carefully at how the price action takes the post-breakout price action. Are we going to see very violent upward moving candles, or is it going to be a walking, gentle ascent into the B wave? That is how we try at hedging.com to identify the personality type that best fits the price action. The personality type then matches a wave type, and that is one way we can, psychoanalyze the price action to best fit the wave action. So if we see these near vertical violent upward moves, it's a new impulse going, and this wave 5 should give somewhere in the range of, let's say, a profit range of from 650 to 980-ish region if this wave 5. Now, I think regardless, this wave 5 is going to happen, whether we see it now earlier or this is a wave bounce and we go further down to a 0.78 and then see a wave 5. That could be higher highs. But if this is the case, then likely the range will probably be expanded to a bit lower in the 5s level as well. So I think for Chainlink, even in this ascent, if you use the stick method of angle of ascent, it'll give you a good indication, just like the way we did here, as to when might be a good time to take this wave 5 profits. I hope you find this to be helpful. Have a great day.